Hello everyone, this is Lily with CPA Consultants. I figured that I should send a quick video to everyone, to all of you, especially my current clients, just to send out a quick reminder in sending out your tax documents as soon as possible. So in 2020, we had this pandemic, right? COVID-19. And of course, the entire nation was affected by it. Now, I would like to show you that there's a lot of tax provisions that might affect your tax return tremendously if you have the qualified expenses or the qualified accounts that can get you more money or more refund or more tax credits, then I suggest that you send in your tax documents as soon as possible, because there are a lot of documents here that might require you to request for a corrected tax statement from the provider. I've seen so many. I have processed and reviewed over 140 tax returns this month and last month alone. And I am telling you that there's a lot of corrections that I am seeing that needs to get done. So now, without wasting your time anymore, let me just give you a quick um, overview of the tax credits. Okay, so and we are going to start with the individuals. So for the individuals, we have the educational assistance, wherein from the previous law there was a limit of 5,000 to 50. Now if you have more that may qualify you, the 5,000 to 50 was lifted. Okay, so that's the one liner summary on that. And then so about the HSA, right? About the HSA. So the new rule is, let's see, let me read it for you, okay? At the end of the year for the plan, year ending in 2020 may be carried over to the plan year ending in 2021. So it used to be that the rule was anything that you did not use will be forfeited. So you use it or you lose it. Technically, that's the gist of it. For the charitable contribution, so technically this is to entice everyone to start doing cash contributions again, because way back in 2000, before 2018, the standard deduction was only $6,300,000 plus for a single or married filing separate. But for 2018, with the Trump tax, with the TCJA tax changes, the standard deduction was doubled. So instead of doing $6,000 plus, your standard deduction was raised up $12,000 plus. You know what I mean? So of course you have to calculate that 2 times if you are married filing joint, or 1.5 if you are head of household. You know what I mean? So because a lot of people are reaching their standard deduction, this made the government feel like, oh no, not a lot of we are not getting a lot of donations, cash donations. So this is why the government started this again. So, and then the other part of this one is, before you have to itemize, you see right here, where is that? It's here somewhere. Before you have to itemize, before you get any deductions for your charitable contributions. But on this one, if you say you have at least 300, if you made cash contributions up to $300 on your charitable contribution, you actually don't have to do standard deduction to get the credit for this, because this is above the line, meaning the calculation is before they start deducting all of those expenses to reach your adjusted gross income, to reach your AGI limit on here. So right here it says 100%. Woohoo! All right, so there goes the charitable contribution. So for educator expenses, effective for expenses paid or incurred after March 12th, 2020. Okay. Educator expenses also includes the cost of personal protective equipment. Okay, so some of you actually called in and said, oh, you know what? I had my carpet done. I'm teaching in school. It doesn't apply. You see, if you are getting a W-2 and you decided that you're going to improve your house just for the sake of the kid, for the sake of the kids, for the sake of making your house really look good. Unfortunately, and I understand, what I will do the same. I will do the same way too. I'm going to try to deduct those types of expenses if I can, but unfortunately, if you're in a W-2 and you did that without talking to your employer first, to get some type of qualified expense reimbursement, it's not deductible. For this one, the educator expense deduction, it's only limited to COVID-19 related stuff. But if it's for your home improvement, it does not apply. It will only apply, quote unquote, if you're using your house for business purposes, if you're actually getting some other type of income other than your W-2 income. You see, if you, let's say for example, you have a class, you were supposed to have 5 students and you accepted 2 other students and they paid you extra, those 2 other students, you got paid extra for that, then you can use those home improvements for your, as deductions. Okay, so you guys, you cannot just claim expenses without, talking to someone about it. Okay, medical expenses. Let's move on. Medical expenses. To summarize it all, before the old rule is you cannot deduct anything unless you have a prescription for it, or unless it is for insulin, or if it's prescribed. If it's not prescribed and if it's not over the counter, if it's over the counter, no prescription, you cannot deduct it. But now the new rule is, as you can see, there's a lot of other things, but I'm giving you the the quick master plan. So now you don't need prescription. Okay, you do not need prescription. You see here, you do not need prescription or recommendation by a physician. Over-the-counter medicines and drugs include amounts paid for. Anyway, over-the-counter medicines and anything that is for feminine products, menstrual care products, tampons, pads, liners, cups, sponges, or similar products used by individuals with respect to menstruation are now deductible. So, congratulations to us ladies. All right, now let's move on. Earned income tax credits. A lot of you guys are missing this. And thank God for those people who called me, because I have a client. If I did not review her tax return, she would have missed $5,000. I found her $5,000. Woohoo! We were jumping for joy. The only bad thing about this is, okay, before I explain the bad parts, I'm going to explain to you the good parts, okay? Here's the good parts. EITC. Okay. The prior law is you can only claim ERTC for the current year, but for 2020 only. If your 2020 earned income is is less than 2019, then you can elect to use 2020 earned income, or you can elect to use 2019 earned income. You see, there's a lot of factors here that is getting that you got to double check. If you claim 2020, but then there's other factors involved, like you have anyway, that would be a different discussion. And by the way, I would like to remind you all, unemployment insurance is not earned income, okay? So it doesn't apply. If you want to earn this EITC, you gotta have something to prove that you actually earned money. It's either 1099 or W-2. You cannot just put your unemployment in there and then expect to get $2,000 or $5,000 back. No, it doesn't work like that. So if you are using if you are using, like if you have a CPA that does not seem to know the new rules, make sure to ask, hey, can you please compare if I use my 2019 earned income tax record to 2020 earned income tax record, see how much I'm gonna get, okay? Because there's a big difference, like as I mentioned to you earlier. If I did not select the 2019 for that other client that I worked with a few weeks ago, she would have lost that $5,000. So, you see what I mean? You gotta have them. If I'm not the one working on your account and you have someone else working on your account, this is a free advice to your tax preparer or tax practitioner, in case, well, not all people are updated with the new rules. I am always updated with the new rules, for the benefit of my clients. And if you are watching this, most likely 99% you are my client. Okay, so because I don't send all these videos to my clients anyway. Okay, so next, economic impact payments. Now, here's the thing about that, right? In 2008, when we had recession, a lot of people received, the stimulus as well. But for 2020 and 2021, people received the first and the second stimulus. Now, when you are filing taxes, and I have handled so many of you already in doing this, make sure that if you say, no, I did not receive my stimulus, or yes, I received my stimulus, make sure that the report that you are providing me or your tax preparer is accurate, because this is being touched. This portion right here is reviewed not by a computer, it's reviewed by an IRS officer. So please, please, please save yourself and save me. What do you call this? Save yourself and save me extra, like time in double checking or in dealing with IRS when you send notices. Hey, they're going to we sent you this money, blah, blah, blah. So make sure that this EIP is accurate, okay? Don't say that you did not get it, but you actually did. All right? Double, triple check your bank accounts. Now, the retirement plan distribution and recontribution and loans. This is a little bit complicated, because if you took out money from last year and you have a 1099-R, I have seen so many 1099-Rs that are incorrect. So if you remember that when you filed your withdrawal, you requested for COVID-19 distribution, COVID-19 related distribution, make sure that the allocation code, the distribution code, is not on a 1. I've seen so many. Like 90% of you has a distribution code of 1. That distribution code, there is no exceptions for that. The COVID-19 related distribution, it's supposed to be coded to 2. Okay? So if you need additional assistance for that, let me know. But just to let you know, guys, my tax advice, it's an extra fee. Okay? Okay, now for the RMD. RMD, if you are going to turn 72, so technically the old rule is if you're 72, you have to take out your distribution, a required minimum distribution. If you don't, you get penalized for 50% of it. But for 2020 and 2021, they kind of let this go. So basically, what do you call this? So basically, you don't get penalized that 50%, or you don't get additional interest if you don't do what you're supposed to do. But I would like to recommend to please pay attention to this, because even if the deadline was pushed, uh, if you can, just do what needs to get done and take your money. It's your money. Go get it. All right. Now, repeal of maximum age for traditional IRA contribution. Now, the old rule was, if you were 70 and a half, you're not allowed to do traditional, or you're not allowed to contribute to your retirement contributions anymore. But after 2019, you're allowed to put back money in there. Okay? So that's the summary of it. If you want to put more money into your retirement account, that's great. But why would you want to do that anyway? I don't recommend that. You're 70 and a half years old. Enjoy life. Travel. Come on. Now, the PPP. Okay? Oh, shoot. Now, we are on the business section of it. Now, guys, you can stop. If you don't have any business and you only have individual accounts, then you can turn your video now. You can turn it off now. Now, let's continue. What's new for business? PPP program. So before, the loans that are forgiven were not deductible. So now they are deductible. Okay? But the calculation of this is kind of pretty intense. So you just have to make sure that your accounting is good on this one. So all of this that you are seeing, that's the summary of it. Before, it was not deductible, and it's not a taxable. It's if any loan was forgiven, it's usually taxable income, right? And then the other part of this is anything that is forgiven is any expenses that you had for that inclusive forgiven amount. Any expenses, it's not deductible. But now, this is no longer taxable, and it's no longer it is now deductible. So, woohoo! For businesses, this is actually good. So you're actually, I would say it's actually double dip, because you got the money and it's not taxable, and then you're getting to expense everything that you used for that forgiven amount. You see what I mean? Don't get mad at me, but that's my what do you call this? That's my take on that. Now, business meals. Now, there's a lot of changes on this business meals. Before, you can only take up to 50%, and then they took it and they said, oh no, anyway, there's a lot of qualifiers. Now, you can either take the 50% or you can take the 100%. So there's a lot of qualifiers on this, and this is a lot of things to discuss. So that's the summary of it. Now, for research and experimental expenditures. This one is technically not one of my favorite topics. So I'd say before, for the research and experimental procedures, you have to capitalize it for a long period of time. Now, um, there's a lot of exceptions, qualifying exceptions, that rather than doing it 15-year period, you can do it 5-year period. But there's actually a lot of qualifiers wherein you don't have to do this. So, which is why this is not my kind of, this is not one of my favorite topics, because there's a lot of exceptions that we can take on this topic. So you don't have to, jump over any hoops to try to get your money or utilize your money, based from this category. Okay. Now, net operating loss. Carrybacks. Woohoo! So, way back 2017, you see here, way back 2017, and then it changed 2017, there's a different rules, and then 2018, there's a different rules. Now, I'm going to discuss with you the new rule. There's no sense of giving you all of the history of the NOLs. So, let me see, for 2018, 19, and 20, you can actually carry back your operating losses for 5 years. Okay? And then you can go all the way back to 5 years. Right? So 2018 minus 5, 2013. Right? So if it benefits your company to take your money back from 2013, 14, 15, 16, 17 up to 2020, you should do that. You might get more money. You know what I mean? So as you can see here, you can only carry back 2 years, but now you can carry back 5 years. Now you can carry forward 20 years. There's so many, it's not even funny. So, and don't worry about this, because I'm just letting you know what the new rules are, what your new options are. So instead of being able to only carry back 2 years, you can carry back 5 years, and you can carry forward now for 20 years. Bonus depreciation. Yay. Okay, so for the bonus depreciation, there wasn't used to be bonus depreciations that is as good as this. Now the TCJA, you can actually, if you put a property in service for this year, if it's new in service for this year for your business, you can actually depreciate the property 100%. So if you bought a car and you're actually using it for your business, if your car is $50,000, you can actually claim that full value of the car. You can take the bonus depreciation of $15,000. Okay? So instead of depreciating it, doing a straight line, or like a double straight, so instead of depreciating it for the value of the car, like for 7 years, then dividing that 15,000 to 7 years. So instead of only getting an expense amount, a depreciation expense amount of $2,142.86 for this year, you can actually claim $15,000 and have the capability of you getting more refund to your money. You know what I mean? For your money. All right? So business interest and expenses. So if you have gross receipts in excess of 25 million before, you are limited to having to deduct only 30% of it based on the AGL limitation. But now it was increased to 50%. Okay, adjusted taxable income. Okay, so it was increased. All right, now payment, delay of payment, employee per. I've done. I do not recommend you deferring your taxes, but it's going to catch up anyway. So why even do it? But if you want to defer paying your taxes, you are allowed to defer 50% of it because the other 50% was paid by the employee. So you can pay your taxes December 31st, 2022. As you may have noticed, the deferring taxes, if it's about payroll, it's not gonna do anybody, but for maybe making more interest from your money, maybe this is really good. But if you really have no other reason to defer your taxes, then might as well pay it, right? But if you want your money to make more money in the bank, like for example you get 5% interest, then go for it. You have until December 31, 2022 to pay for it. Tax credits for paid okay, so this is the ERTC, right? This is the FFCRA. So if you are an employer and you have qualified wages that you actually paid your employees, you are allowed this is fewer than 500 employees. You are allowed 100% refund, okay? Refundable tax credit if whatever you paid for your employee. And the limitations to this is depending on the type of employee that you have. If your employee gets paid more, $50 per hour, then you gotta pay $50 per hour. But that limitation is only 10 days. So 50 times 10, so you get that much money. And then if the employee has up to $20 per hour wages, then you have $20 per hour times 8 times 10 days. Okay? No, actually that's not times 8. That's $200 per day limit only for up to 10 days. Now, there's a difference to this though. You see this FFCRA, if one of your employee actually used the FMLA and then they extend it because of COVID, then they have up to 12 weeks of and you actually paid their FMLA, a portion of their FMLA, then you have up to 12 weeks limitation payment on that. You can get all the money that you paid for that, okay? Now, the employee retention credit. Now, there's two factors to this, 2020 and 2021. 2020 is you get up to 50% of what you paid for your employee, okay? So, and it's only, the max is $5,000 per employee for 2020 for the year, and then for 2021 the max is $7,000 per employee for the calendar year, okay? Per calendar quarter, but it's you can only take this one time, okay? All right, so give me just 1 minute. Plan for calendar quarter. Yeah, for calendar quarter. So you only can take this one calendar quarter, and then the other one, you cannot use the FFCRA. This one you cannot use this together with this. It's either or. It's either you do this based on your calculation, whichever is higher, or it's either you do this. Okay, so prior year AMT. Okay, so before the AMT, if you have any credits, you can take it a little at a time, okay? But for 2019, you can take all of the credits that you are owed to be refunded for 2019, okay? That's the gist of it. Okay, there you go. So I hope that you have those are the new tax provisions. So I would recommend for you guys to make sure to send me all your documentation so we can strategize on which of these tax credits we can use. All right, so I actually have this. I have, if you call me, this will be the number. And our website is cpa-consultants.com, and you can email me at this number. So please do not hesitate to call me anytime. Okay? Anytime. Also, I would like to say that the tax planning is not while you are doing taxes. The tax planning is before the year begins. So we are late. A lot of you, we are always late on what needs to get done. So that's why it's harder sometimes to work on your tax return, and you end up paying me more because my business is time and information. So if you want to save a lot of money, make sure that your documents are all in order. If they are not, and we keep going back and forth, then my clock ticks and your bill goes up. So, all right. I would like to say happy tax filing, and looking forward to working for this year with you. Bye.